Bloomberg Audio Studios.
Podcasts, radio, news.
Good morning, I'm Nathan Hager.
And I'm Karen Moscow. Here are the stories we're following today.
Karen, we begin with some key primary results across the country. First stop is New York, with results from the most expensive congressional primary in U.S. history. Let's get the latest with Bloomberg's John Tucker in New York. John.
Nathan, Westchester County's top elected official, pro-Israel centrist George Latimer, defeated incumbent Jamal Bowman, a member of the so-called squad of progressive Democrats on Capitol Hill. Latimer's win is a boost to more moderate Democrats. His victory speech was an appeal for unity.
We have to look at the arguments of the far right and the far left and say, you cannot destroy this country with your rhetoric and your arguments.
One of the top issues was the war in Gaza. Bowman hammered it home in his concession speech.
We will never stand for the bombing and killing of babies in Gaza.
The closely watched campaign devolved into bitter infighting that symbolized larger divisions within the party nationally, a rift that some Democrats worry could damage President Biden's re-election. Ad spending in the race clocked in at an eye-popping $23 million. With 71% of the votes counted, Latimer was ahead 55.8% to 44.3%. His victory in the heavily Democratic 16th District all but ensures he'll win the general election. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thanks. Well, besides New York, 3 other states held congressional primaries, and Republican candidates backed by Donald Trump came up short in 2 of them. In South Carolina's 3rd District, Sherry Biggs defeated Mark Burns in a runoff election, 51% to 49%. Biggs is a political newcomer who is backed by South Carolina's Governor Henry McMaster. Burns is a black pastor who supported Trump for nearly a decade, though the former president did not campaign for him.
In Utah, Karen, the race for Mitt Romney's open Senate seat goes to Congressman John Curtis. He won with 50.7%, defeating a Trump-endorsed mayor, Trent Staggs, and 2 other Trump-supporting candidates. And in Colorado, Congresswoman Lauren Boebert won her bid for re-election after switching districts to run for retiring Ken Buck's open House seat. Boebert defeated several lesser-known candidates with 43.3% of the vote.
Well, Nathan, as we continue to assess the primary results, we are now just 1 day away from the first presidential debate between Joe Biden and Donald Trump. The 90-minute debate will include no audience, and the candidates' microphones will be turned off when it's not their turn to speak. Bloomberg's David Gura is covering the debate for us in Atlanta.
It'll be strange. It harkens back to the debate in 1960, and Mark Thompson, who runs CNN now, has been very clear about that. He wants to return to the sort of Kennedy-Nixon style intimate debate on a stage without the presence of an audience. And we're going to have the moderators of the debate, Dana Bash and Jake Tapper, with the ability to mute the candidates while each other is speaking. It'll be very interesting to see how each feeds off that lack of audience, if that makes sense. We know of Donald Trump, the former president, and how he loves to speak to big crowds, how that animates him. This will be an entirely different thing to be in this studio in a room with just the moderators and his opponent with President Joe Biden.
Bloomberg's David Gura will be part of our special coverage of the CNN presidential debate. It all begins tomorrow night at 8 p.m. Wall Street time with a special edition of Balance of Power with Joe Matthew and Kayleigh Lyons in Washington. Listen to the debate on Bloomberg Radio or watch it on Bloomberg Television.
Now, Karen, to the latest on the war in the Middle East. Defense Secretary Lloyd Austin is warning that a clash between Israel and Hezbollah could set off a new war. Bloomberg's Ed Baxter has the story.
Austin, standing beside Israeli Foreign Minister Yoav Gallant, sent out the message to the globe generally and Israel specifically. This is Israeli Prime Minister Benjamin Netanyahu pulls troops to the north near Hezbollah.
Another war between Israel and Hezbollah could easily become a regional war with terrible consequences for the Middle East.
Austin's message to Hezbollah is that its provocations threaten to drag the Israeli and Lebanese people into a war they do not want. Ed Baxter, Bloomberg Radio.
All right, Ed, thanks. We turn to the markets now. A nearly 7% rally in NVIDIA shares helped tech stocks bounce back yesterday. The Nasdaq rose 1.2%, and Nasdaq futures are higher once again this morning. Still, Rebecca Patterson, former chief investment officer at Bridgewater Associates, says there could be some headwinds for investors.
I do think as we get closer to the election, as we're higher for longer on Fed funds for longer, that equity gains could be more limited from here. We've had a huge run up already. notwithstanding the couple days pullback we got. So I'm not looking to reduce equities or get out of equities in the short term.
And former Bridgewater CIO Rebecca Patterson notes the S&P 500 is up almost 15% this year.
And helping give a boost to the markets this morning is FedEx. Karen, those shares are higher by nearly 13% in early trading. The company delivered a profit forecast above Wall Street's expectations. More from Bloomberg's Doug Krisner.
It comes after a slew of cost-cutting measures aimed at increasing margins and coping with sluggish demand. FedEx is expecting $2.2 billion of permanent cost savings in the fiscal year. The company also hinted at a possible divestiture of its freight business. FedEx said it's assessing the unit's place in the company's portfolio. And on top of that, FedEx is expecting to buy back $2.5 billion worth of common stock in fiscal 2025. The company is also forecasting capital spending of $5.2 billion. This will include fleet and facility modernization and automation. In New York, I'm Doug Krisner, Bloomberg Radio.
All right, Doug, thanks. Well, FedEx shares are not the only ones on the move this morning. Rivian is surging more than 37%. The EV maker is getting a much-needed cash infusion through a new partnership with Volkswagen. VW will make an initial $1 billion investment in Rivian and up to $4 billion more over time. The surprise tie-up provides Rivian with a financial lifeline after it has struggled to ramp up production and deliveries of its electric pickup and SUV models.
And Karen, Disney may be giving an even faster pass to visitors at Walt Disney World. Disney's Florida theme parks will now let parkgoers reserve a space in shorter lines for rides up to a week in advance. Right now, visitors can only book a day ahead on the Genie Plus reservation system. The new system will be called Lightning Lane MultiPass. Guests at Disney hotels will be able to make 7-day reservations for up to 3 rides. Other guests will get to book 3 days ahead. Prices vary depending on the park and time of day. The 3-day MultiPass will start at $15. The most popular rides can start at $10. The changes take effect July 24th.
And one other note here, Nathan. Bloomberg Business Week is out with a new monthly magazine that's redesigned from the ground up. Check out the cover story on Bloomberg.com and the Bloomberg Terminal, featuring an interview with Bernard Arnault, the head of LVMH and one of the richest people on earth. The new magazine puts an emphasis on original photography and includes news story formats to give you context, analysis, and perspectives that provide new ways to think about the world. Check it all out, the new Bloomberg Business Week at Bloomberg.com. And it's time now for a look at some of the other stories making news in New York and around the world. For that, we're joined by Bloomberg's Michael Barr. Michael, good morning.
Good morning, Karen. Wall Street Journal reporter Evan Gershkovich went on trial behind closed doors in the Russian Ural city of Yekaterinburg 15 months after his arrest on espionage charges that he, his employer, and the U.S. government vehemently deny. The 32-year-old journalist appeared in the court in a glass defendant's cage with his head shaved. Gershkovich is the first Western journalist arrested on espionage charges in the post-Soviet Russia. The State Department has declared him wrongfully detained. WikiLeaks founder Julian Assange is on a plane heading to his home country of Australia. Assange was sentenced to time served, all in Britain, as part of a plea agreement with the U.S. Justice Department that secures his freedom. The plea was entered in a U.S. court in Saipan. The judge pronounced him a free man after imposing the sentence. Lawyer Jennifer Robinson has been representing Assange in Australia and the U.K.
Julian has suffered for more than 14 years because of the risk of extradition to the United States. He faced 175 years in prison for publishing evidence of war crimes, human rights abuse, and U.S. wrongdoing around the world.
In a no-holds-barred report, the National Transportation Safety Board called out rail giant Norfolk Southern in the handling of last year's train derailment in East Palestine, Ohio. Norfolk Southern was criticized on everything from the faulty wheel that led to the trains going off the tracks to the company's lack of cooperation during the investigation. NTSB Chair Jennifer Hamady.
Norfolk Southern tried to submit their own investigation under the guise of a party submission, not once, not twice, not 3 times, but 4 times.
The NTSB's Jennifer Hamady also pointed out it was unnecessary for Norfolk Southern to recommend firefighters perform a vent and burn, which potentially cause further health hazards. President Joe Biden will issue a proclamation giving mass clemency to U.S. service members convicted of charges under a Cold War-era purge of gay and lesbian people, reversing a decades-long policy of discrimination that forced an estimated 100,000 people from the military. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg, Karen.
All right, Michael, thank you. Time for the Bloomberg Sports Update with John Stashower. John, good morning.
Good morning, Karen. On the eve of the NBA draft that begins tonight in Brooklyn, a big trade. It was between the Knicks and the Nets. The Knicks had accumulated a boatload of draft picks, and most of those picks are now moving boroughs as the Nets get the Knicks first-rounder tonight and future first-rounders in 2027, 29, and 31. In exchange, the Nets traded to the Knicks their best player, Mikal Bridges, so the Knicks have now yet another former Villanova star. Bridges will be reunited with his college teammates Jalen Brunson, Josh Hart, and Dante DiVincenzo. Atlanta has the first pick tonight, then Washington, and both may take French teenagers Zachary Rizusha and 7-footer Alex Starr atop most mock draft boards. Another French teenager, Victor Wembanyama, was taken first a year ago. While the Knicks and Nets made the trade, the Mets played the Yankees, and Mark Vientos came up fourth inning, having already homered once.
Is cracked in the air on a line toward right center. It is off the top of the wall and gone! Vientos hits an absolute laser to right center. It hit the top of the wall and popped into the Yankee bullpen. His second home run of the night.
On WCBS, both Vientos homers came off Garrett Cole, who also served up homers by Harrison Bader and Brandon Nimmo. The Mets built up a big lead and then held on after an Aaron Judge grand slam in the 8th inning. They beat the Yankees 9-7. The Mets have won 10 of their last 12, and half those wins, they've scored 9 or more runs. Yanks have lost 7 of 9 in 6 of the 7. They've given up at least 7 run series ends tonight at Citi Field. 7th straight win for Cleveland, 10-6 in Baltimore. Guardians have the best record in baseball. John Stashower, Bloomberg Sports. Karen, Nathan.
Coast to coast on Bloomberg Radio, nationwide on Sirius XM, and around the world on Bloomberg.com and the Bloomberg Business app. This is Bloomberg Daybreak.
Good morning. I'm Nathan Hager. We want to turn now to a conversation from the Bloomberg Invest Conference in New York. Cliff Asness, founder, managing principal, and chief investment officer at AQR Capital Management, spoke to Bloomberg's Shonali Bassick in a wide-ranging conversation touching on active and passive investing and the rise of meme stocks. They began by talking about the efficiency of the market today. Let's listen in.
Efficient is this idea that prices are accurately reflecting fundamentals. You can get really geeky on how to define that, but let's just be colloquial. I do have a view, it's not a short-term view, it's not a market call, that, again, markets are never perfectly efficient, but over my career, which is annoyingly about 32 years now, I guess the opposite would be even more annoying, but it's a long time. I'm a little obsessed these days with those internet memes of when they show you like an actor like Ed Asner and Mary Tyler Moore was 10 years younger than me when he did the role. It's very upsetting. But over my career, I actually think markets have gotten somewhat less efficient, meaning prices are a little bit more disconnected from reality. It ebbs and flows. It's never the same at each point in time. But I find that an odd view because one tends to think, as technology in particular advances, that things should march towards better, with better, I think, being efficiency in this case. And I actually think maybe I'm biased by having a front row seat, but I think over the last 30 or so years, I'd say the market is somewhat less efficient than when I started.
So why do you say that is? What is causing it to be that way?
It's, well, first I start out by just observing a few facts. And I am, of course, biased by what I've lived through, but I loved Gina's presentation. The dot-com bubble stuff was bringing, PTSD-like memories for me. We try to very formally measure how disconnected from reality or not, or how reasonable our stock prices, in particular, not the price of the whole market, but within the stock market, are cheap versus expensive stocks. You could define that very narrowly in a quant sense in terms of just multiples. You could define it more broadly in terms of a Graham and Dodd sense. Yeah, you want to pay a low multiple, but what's the quality of the stock? What's the risk of the stock? But either way, measured very formally, the dot-com bubble saw by far the largest disparity between cheap and expensive we had ever seen in about 50 years of data. We survived that. It was a little ugly for a while, but we actually thrived through it if you take the whole round trip. But when you almost die in the first half, you tend to remember that. If you had asked me in, say, 2002, when all of that excess was pretty much worked off, are you going to see something more extreme than that in your career? I think I'm smart enough, even back then, to never say never. We don't live in a business where any of us should say never. It's a dangerous word. But I think I would have said it's highly unlikely. That was the craziest thing we had seen in 50 years. I would have said, well, in 20 years, people like me will still be around, I hope, who with some memory. It's not 100 years where everyone is forgotten. And then pre-COVID, it was close. And then after COVID hitting, we saw things measured very similarly. Price multiples or even price multiples scaled by quality to go to levels well beyond the tech bubble and lasting about doubly as long as the tech bubble. If you ever have the misfortune to have an investment that ever goes down for any amount of time, you will learn something that they don't teach you in a PhD program. Severity is bad, but duration is underrated when it comes to pain. 3 years of pain, even if it's cumulatively not worse than a year and a half of pain, is a ton worse. The first year you go back to your clients and go, we think we're right, look what's going on here. And they go, okay. The second year they're like, that's the same thing you said a year ago. And you go, yeah, but it's still going on and we're still going to be right. The third year, I mean, your mom's still invested, but it's getting tougher. So duration counts. So we've seen both the severity and the duration of those. So I start out just observing facts. And then trying to fill in why. Admittedly, this is a lot of op-ed. This is very hard to prove. And I love to, I'm a card-carrying quant. I love to, produce tables. I can show you these spreads, but why? And I tend to I think it's a multitude of things. I think the number one thing is probably the thing we all love to blame, the internet and social media. I think a lot of people naturally assume such a thing would bring us information so quickly and so ubiquitously, knowing everything, that prices would be very efficient. But that's never been the hard part. When I started in this industry, we got earnings within 20 minutes. The difference between 20 minutes and a nanosecond matters to an HFT. It doesn't matter to almost every other investor. We didn't really materially get more. And I do think that level of information overload gives people a lot of illusion of control. I don't want to go into this deeply because I know you'd like to get me going on this, but I think the meme stock examples, I don't think they're the norm by any means, but I think they're the ultimate example of a little bit of information making you think you really know something very deeply. And I think that gets into market prices.
I'll be careful to keep this a little reined in, but on the meme stock issue.
I knew I'd get that started.
How much are the retail traders that are bidding up prices of stocks like GameStop contributing to this idea that markets are less efficient to you?
I think they are a very small part in dollars. They may be poster children in some sense for the effect. The whole idea that this disconnect in prices can come in a world where we have all the information at our fingertips. I think we're all raised, at some point we've all read about the, quote, wisdom of crowds, the way, if you take a crowd that on average people have 51% information, but you poll them. Hope many of us here are old enough to remember Regis Philbin and Who Wants to Be a Millionaire? The absolute best lifeline was always poll the crowd, right? Because if they asked a question, what does it say on the back of a quarter? 85% of the people don't know. But they're evenly split. And the 15% who do know all go one way. But there was always a little unspoken footnote to the wisdom of crowds. To have a wise crowd, it's got to be fairly independent. If everyone got to talk about the quarter, not look at a quarter, that's cheating, but talk about it, the people who are wrong convince the people who are right and whatnot, A crowd where everyone is coordinated and not independent has the risk of becoming a dangerous mob. And I don't know about you guys, but I can't think of anything better at turning a wise, independent crowd into a dangerous mob than the internet and social media. So I do think they're kind of the poster child. I don't think economically they are that important. They, I don't want to disparage either side of it, but it's $9 in terms of, NVIDIA laughs at that on a daily basis. The entire meme stock phenomenon is like a little part of a day of NVIDIA. But I think it is a poster child for the concept I'm talking about. There are other candidates. People talk about the role of passive. That's really complicated. I'm not one who just looks at passive and goes, that's causing all kinds of havoc.
What is it causing?
Okay, I'll disappoint you here. People, I don't think we really quite know yet. First of all, here are the things we know about passive. Not everyone can be passive. The whole world breaks down. Even back when I was a PhD student, so this is the early 90s, this is what happens when PhD students in finance get drunk late at night. They sit around going, what if everybody tried to be passive? And that's a black hole. That's a singularity in finance. Nobody's looking at individual stocks. And that just can't work. Passive is free rider. Is a free rider on active managers, making sure prices are somewhat reasonable. But the question of how many people can be passive, nobody really knows.
Do you think it's contributing to inefficiency? And is efficiency, frankly, another way of saying wild swings in markets?
I think I would guess yes, but I think it's pretty small versus the social media, the illusion of control, the data overload things I'm talking about. It's not clear theoretically. If imagine you had a world where you had a certain amount of passive and active, and suddenly a lot of active moved to passive. Whether active is now easier or harder, whether it's more or less efficient, depends on who moved. And let me be really obnoxious and go, there were sharks and minnows. There were people who were good at it and people who were bad. If all the minnows move, markets get really efficient because sharks are trading with sharks. They all are pretty good at valuing these things. And the sharks don't make a lot of money. We don't really know who moved. My reasoning here is really just correlation, not causation. This has occurred at the same time that massive price disparities have grown and lasted longer. So as a pure guess, I would have to go, it's probably contributed something. It's very hard to assign. Another one is, I'm probably the billionth person to mention this, but over the same period, we've had 10 years prior to a couple of years ago of ultra low nominal and real interest rates. I am not a person who thinks that means growth stocks should go to the moon. I've written papers on the math of that's kind of wrong. They're not actually that much longer duration. But the market disagrees with me. The market thinks when interest rates fall, growth stocks should go to the moon. And so ultra low interest rates have probably contributed to a fair amount of that also. So I think it's a witch's brew, but if I had to put the three, I think maybe I'm just an old man ranting at TikTok, but I think the feeling that you own all the information and are on a level playing field, and therefore you can own two stocks and be very confident about it, is probably my number one thing to point at.
So let's step back for a minute, because you were concerned about the efficiency of markets here, and we asked, has the market gone awry? Has something about the market broken to you?
Broken, such an ugly word. These are points on a spectrum. For me, broken is very, I'm going to define that as are we in a bubble, or the opposite of a bubble, an irrational depression, where people won't pay any fair amount for stronger companies or whatnot. A bubble is when we look at the companies people like and they're willing to pay giantly excessive amounts. So let's say bubble and broken are equivalent. I use the word bubble, I think, less than a lot in the industry. I once wrote a sarcastic piece. Really doesn't narrow it down amongst the pieces I've written. But making fun of the term bubble, that on the extended use of the word Wall Street, a lot of people will see bubbles everywhere. And they translate it a little too weakly as a bubble means a stock I kind of don't like. No, that's not a bubble. A bubble, to me, is a vastly diversified set of things that I cannot come up with any reasonable assumptions that could possibly make these valuations work. I have seen two in my career that I think we identified before the fact, and one I was a passive watcher of. The dot-com bubble, which again, the PTSD from the earlier presentation, and then really 19 and 20 when stocks surpassed I would use the word bubble for that.
This is Bloomberg Daybreak Today, your morning brief on the stories making news from Wall Street to Washington and beyond.
Look for us on your podcast feed at 6 a.m. Eastern each morning on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each morning starting at 5 a.m. Wall Street time on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Nathan Hager.
And I'm Karen Moscow. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak.